So we have some pretty nice news from RexShares, which is one of the underrated players in the ETF high income space. Now, if we take a look at their existing lineup of their weekly paying ETFs, it's going to be the growth and income ETF suite, which is going to be currently only 4 ETFs. We have the RexShares Coinbase Growth and Income ETF. We have the MicroStrategy Growth and ETF. And we have NVIDIA and Tesla. Now, these are only going to be 4. You only have 4 choices, but they are coming out with some more. We can see in their Form N-1A that they just filed, we are going to have a ton of new ETFs on various stocks and companies. As we can see, there are about 36 of them, and we have some interesting ones as well. We have some companies that we've never really seen before in a single stock ticker ETF, such as Realty Income, which actually caught my eye. Very interesting. We have a lot of other ones as well, such as GameStop. We have some that you probably never heard of, which is going to be BYDDY, CEPT. A lot of companies that are going to be very new to a lot of people, but this is going to give you a ton of diversification and options for what you want to invest in. And we've used AI to help us break down what companies these actually are and the underlying tickers. So we have Apple, we have AMD, we have Amazon, we have ASML, which is semiconductors, we have Broadcom AVGO, we have Alibaba, we have Booking Holdings. Of course, we can't forget Berkshire Hathaway. We have BYD Company, which is going to be in the electric vehicle space. We have Cepton, which is going to be autonomous driving. We have CrowdStrike, cybersecurity, CoreWeave, also in the cloud area and AI, DraftKings, GameStop, Google, Robinhood Markets. We have iBit, which is the iShares Bitcoin Trust. Very interesting one. We have Ionic Q, and we have JP Morgan Chase. We have Eli Lilly and Co. We have Marathon Digital Holdings for crypto mining. We have Facebook or Meta, Microsoft, Netflix, ServiceNow. We have Realty Income, which is a real estate investment trust. We have Palantir Technologies, RGTI, which is going to be quantum computing. We have SMCI, supermicrocomputer for servers, AI infrastructure, and semiconductors. We have SMR, which is going to be NuScale Power for nuclear power, a very interesting one. We have Snowflake, Tempest AI, and we have TLT. I'm pretty surprised they're actually having a TLT on this one. That one definitely caught my eye, which is the iShares 20-plus year Treasury Bond ETF for fixed income and treasuries, of course. Then we have Taiwan Semiconductors, United Health Group, and Walmart. So we have a very diversified list here. Most of them are, of course, going to be in the technology space, but we have a lot of other companies as well mixed in, especially with consumer discretionary. We also have some real estate with Realty Income, some fixed income with treasuries, TLT. So very interesting mix here. And if you're not familiar with the RexShares growth and income lineup, as we mentioned earlier, there's only 4 right now. So not many people were talking about these ETFs because they didn't really have an ETF for everyone. Now what it is, it's going to balance growth and income. So it's going to combine amplified exposure, because this is going to be between 1 to 1.5 times leverage. It could vary. Right now it's actually at a 1.25x target for leverage, which is going to give you amplified exposure, a little bit more income from the premiums, which is what people really want. And it's going to give you weekly income, which is something that every investor nowadays is looking for. So we're going to have a ton of weekly paying ETFs. And I hope to see that since they're going to have 36 different holdings for the growth and income ETF lineup, could we see a fund of funds in the future? That is probably on the way as well once these are all released. And if you're not familiar with fund of funds, Roundhill just released their WPay Weekly Pay Universe ETF, which is basically their fund of funds. We'll make a separate video on WPay. They did release their first distribution. A lot of people are very happy. It's seen capital growth as well. A very solid choice for a weekly paying ETF. But RexShares is coming out with their own ETFs as a direct competitor to Roundhill's WPay lineup, as it's going to have leverage exposure as well. Now, if we take a look at what it is, it's going to have half of the portfolio to seek to generate weekly income via a covered call strategy, which is going to give you that income portion for your weekly dividends. Now, the call options are written on half of the portfolio using short-term out-of-the-money contracts, seeking to generate consistent weekly income by capturing elevated volatility. Now, with any of these income ETFs, it's going to rely heavily on volatility. And by having this 1.25 times leverage, they're going to be able to generate a little bit more premium because it's going to be a little bit more volatile. That's just kind of the trade-off. And it's going to have out-of-the-money call options, so you're not completely capping your upside. You're going to have some room for growth as well. And it's only going to do it on half of the portfolio, as it says on their website. And the other half of the portfolio is going to remain uncovered. Very interesting. It's going to allow for untapped upside potential, which is something that people have been asking for a long time. We want to see weekly income. We want to see reliable income. But we also want to see that when we have huge bull rallies, that our ETFs also grow in price. So it's a good, healthy mix, in my opinion. You don't want something that pays out 200% distributions but always declines. That's not really good in the long term unless you're constantly reinvesting to get those lower share prices. But the other half is going to remain fully exposed, preserving the ability to capture the full price appreciation during market rallies and rebounds, which is very key. We have seen during Liberation Day, which is what we call it, April 4th or April 1st, that a lot of stocks did drop, but it quickly rebounded, and a lot of income ETFs were left in the dust, mainly because they have covered calls on all of their holdings, 100% of the portfolio, which leaves little to no room for upside potential, and they're not capturing this nice rally that we've had in the past 3 or 4 months or so. So it's very good to see that a lot of ETF issuers are coming out with growth and income balances for their ETFs, which is something that could be probably the trend going on for the future. Now, if we scroll down, we can see the features. Of course, as we mentioned earlier, 1.25 times leverage. It's going to be between 1.05 times to 1.5 exposure to the underlying equities, and it could vary a little bit. But that's not, even though it's using leverage, it's not that big of a deal in my opinion if it's only going to be about a quarter leverage. So it's very reasonable, and it's going to give you enhanced income as well as enhanced exposure to the underlyings. When we have bull rallies, it's going to do some nice upside potential. And as mentioned earlier, the other half is going to be uncapped upside. It's not going to sell covered calls on this half. It's just going to hold it in its portfolio. So you're going to be able to capture more of the rallies that single stock takers are known to have. And of course, we have weekly income from the call premiums, which is going to generate every single week with the covered call strategy that they're going to use. So overall, what you're getting is growth and income without compromise. Before all the covered call ETFs, you had the compromise of losing out on upside potential. With these ETFs, you're going to have that income as well as upside potential, which is very good to see, especially for people who are long-term investors and not necessarily going to retire just yet. So this growth and income ETF could help balance your portfolio. Use the income to pay off your bills and use the growth to grow your portfolio. But we do want to mention that there is downside potential as well. With any of these income ETFs, especially covered call ETFs, you're fully exposed to the downside, but it will outperform the underlying because you are getting income from the call premiums. So that is something to keep in mind. It will cushion it a little bit, but you are fully exposed to the downside. So there is risk involved. But there is pretty much risk and trade-offs with any investment, so it's not a big deal in my opinion. And they have the frequently asked questions below here. How is the strategy different from traditional covered call ETFs? So, as we mentioned earlier, traditional covered call ETFs are going to cap the upside by writing calls on 100% of the portfolio. With RexShares Growth and Income ETFs, it's going to be leverage exposure to the underlying stock and sell calls on about half of that, which is going to preserve the growth potential. How does the fund generate income? It's going to be through selling out of the money covered calls on 50% of the portfolio, and all of the dividends are going to be distributions, not a traditional stock and dividend, but it's going to be cash distributions funded by the option premiums, which could vary and may include a portion of return of capital. So it's going to be deferring your taxes during some weeks. And let's go over the main risks of these ETFs. Capped upside on the portion of the portfolio covered by calls. Synthetic exposure risks such as options pricing and liquidity. So it's going to rely heavily on the options market and implied volatility. And you're going to have NAV fluctuations due to volatility, leverage, and compounding effects. Are these funds designed for holding long term? They can be held beyond a day, but investors should understand that compounding effects may cause returns to diverge from the underlying stock returns over time. Active monitoring is recommended. So this is going to be good for long-term holding, but we do want to note we don't have a fund of funds yet, which in my opinion would be the best fund to hold long term, because when you're investing in any of these single stock ticker ETFs, you are going to have significant risk because it's just one company. We want for most investors to have a diversified portfolio. So in my opinion, I'm not really going to be buying any of these ETFs, but I am going to wait and hope that they're going to come out with a fund of funds, which is an ETF that contains all of their growth and income ETFs that we've seen with WPay from Roundhill, which is absolutely amazing. But we do want to note some of the ETFs that they have out have been performing really well. NVIDIA, for one, is up 21% since May of 2025. So you're seeing some good capital appreciations. We know that the growth aspect works and it's been paying out reliable dividends. As we can see, it does fluctuate a little bit, the cash payments. Sometimes it will have higher distributions, mainly because higher implied volatility. It could be due to news for the company or even earnings. September 3rd, I believe it had earnings, so implied volatility was really high. Thus, we have a higher distribution for that week. But if you are bullish on any of these companies, you should definitely consider them. In my opinion, a lot of these funds are going to be pretty new. Usually you don't want to invest right away. You want to wait a few weeks so it can kind of settle down. But my top recommendation, wait for the fund of funds in order to get a diversified exposure to all of their growth and income ETFs, which in my opinion would be the best bet and what I would personally do in my opinion. So let me know down in the comments, are you going to buy any of these ETFs? We have 36 coming out. It should come out in 2 to 3 months from the recording of this video, mainly because once you file those N-1As, it does take a few months for them to actually come into effect. So we do have to keep our eyes on these ETFs, and down the line, we're hoping for that fund of funds.